In. Well, market expert Ajay Bhodke joins us now to talk about that. Ajay, first a word on the technology stocks. There are, of course, big deals that are being won, whether it's Infosys, whether it's HCL Tech, and stocks are coming back as well. What would your pick of the pack be here?
Good morning, Sonia, and thank you for having me on the show. I think the string of deals, large deals that are being announced by some of the IT majors is making me constructive on the IT sector with the medium term. I think we've seen that there was a shocker from Infosys when they cut their revenue guidance to 1 to 3.5% from as high as 4 to 7%. And there was a correction in the stock subsequent to that. But the announcement of this deal has come on the back of two very large deals. Again, BP deal of 1.5 billion and a Danske deal of around $500 million. Although my discussion with the analysts is making me believe that this deal could possibly be earnings dilutive on the same lines as the past Verizon and Daimler deals. And also the contribution of this deal in the current financial year will be minimal. So although in the medium term, I think the accretion of such large deals will be looked at positively, but actual impact on the margins for the company in the near term is something which the market will be looking at. And from that perspective, I think, one can be constructive, but over the medium term in case of companies like Infosys. Insofar as telecom sector is concerned, because HCL Tech also had announced a very large deal in telecom sector, and Infosys also now the current deal is related to telecom sector. What is also positive is if you look at one comment from Salil Parekh, I think this deal essentially is linked to two buzzwords. It is transformative AI, as well as it also talks about building on the cloud computing work that the company has done. Now, both these areas of cloud computing as well as AI are higher margin digital initiatives that the companies are embracing. And from that perspective, the margin trajectory, I think, could look up for some of these companies if they keep on pouring more into these two sectors. So that's why I think one needs to be constructive, but one should hold one's horses and not jump in immediately.
Okay, all right. Hi, Ajay. Good morning. What about Interglobe Aviation? Well, things have been going well for them, right? Solid earnings is what they're delivering. Market share up, I think, 600 basis points, or you have a large trade that will take place, so some part of that overhang will continue. Though in the near term, for 150 days, there's a cooling off period. How do you approach the stock? My problem is that ATF prices have started increasing. I think they're up more than 10% from the recent lows. Your view on the stock?
I think that would clearly act as a headwind. But if you just parse through the first quarter numbers, I think the company posted extremely strong, operational performance in the first quarter. The execution of the strategy has been perfect. And the market conditions also remain favorable insofar as competitive pressures on the other airlines are concerned. So I won't be too worried on the rise in ATF prices because I think the company has the pricing power to pass them on. The passenger numbers continue to rise. The load factors have improved in the last quarter. And the second quarter, I think the company has given a guidance of a 25% increase in capacity in terms of the ASKs. So I think, so far as the overhang of the stock selling is concerned, I think the market has already digested that. Mr. Gangwal has already said that over the course of 5 years' time, he would like to diversify out of his holdings in Indigo Airways. And that's why I think last September, I believe they had sold some 2.5 or 2.75% share. And now I think after nearly a year, the current tranche of $450 million is coming in. I think market has the absorptive capacity for the supply, and I think one should have Indigo as part of one's core portfolio.
Okay, got it. Ajay, just a quick word on actually two sets. These shipbuilders all saw massive rallies on Monday. Mazgaon, Cochin, Garden Reach, they were all up 10%, 12%. So there is momentum there. Any thoughts, anything you like there? And then just a word on ITC.
Yeah. So I think I'll take ITC first, Prashant. I think the numbers, I think, have been better than market expectations. I think the cigarette volume growth, which market closely watches at 8% volume growth, remains to be quite okay. And there, I think the stability in taxation regime, plus the enforcement agencies coming down hard on illicit sale of cigarettes is something which acts as a tailwind for the cigarette sector. And for the first time, I think the FMCG revenues have gone above 5,000 crores in a quarter. And the margins also have looked up quite strongly by nearly 3.25%. They have gone up to 11%. So I think that medium-term trajectory of FMCG margins is something the market which is excited about and looking for an upmove is something which will be positive. Of course, on the negative side, I think on the paperboard side, I think there are emerging concerns because internationally pulp prices are coming down. The supplies from China are increasing quite rapidly. And both the domestic and export market, the demand is remaining subdued. So that, along with, as Lata has said, rising food inflation in cereals is making the government worry. And that's why we are seeing clampdown on wheat and rice exports. And that's why the agri-business has taken it on the chin. If you look at the agri numbers, I think they're down 24%, the sales in the quarter. But if you leave out these two wheat exports, they're still up around 31%. So overall, I think ITC continues to be, I'm constructive on ITC. I think it should be part of one's core portfolio. And so far as hotel business is concerned, I think the last year's base was very high. So one should look at the hotel numbers from that perspective. They're a bit subdued, but overall, I think one should be positive on ITC.
Okay.
And so far the shipbuilding question is concerned, just I'll take a second. I think the Prime Minister's announcement about the PSUs being looked at favorably had benefited PSU banks as well as some of the other PSUs in sectors like defense, space, railways. In my opinion, in many of these shipbuilding as well as defense companies, one needs to exercise caution. The book to build is very strong. The government's emphasis on Atmanirbhar Bharat will continue to see that large orders continue to come in. But let us not forget that the market has got too euphoric. Any announcement of an order leads to an increase in market cap, which is, significantly, say a 2,000 crore order. If it's going to lead to a market cap increase of, say, 1,000 or 600 crores, let's not forget these are long-term orders. There are execution challenges. Raw material prices increase, the pass-through is fully there or not, we don't know. But I think we have been there previously when BHL also used to trade at a very high price. I'm talking about pre-2010. Book to build was very high. But then I think the slow-moving orders did it in and the margin profile deteriorated. So I think positive, but please be cautious in railways, space and defense names.
All right. Well, we thank you for joining us, Ajay. Have a great day. And thanks for being with CNBC TV 18.